Hi everyone, welcome back to my channel. It feels great to be back after the longest time. Hopefully I am recovering well enough now and I should be back jumping into action with the markets. I've been having major FOMO, I've been dying to trade, and hopefully tomorrow is the day I get back into markets. So I'm here with my analysis and let's begin. Let's as always begin with Dow futures. So basically we are seeing a very strong pattern over here. If you also see what I'm seeing, this very strongly translates to an inverted head and shoulder on Dow daily time frame, Dow futures. So right now I'm extremely bullish with the US markets, and which in turn also translates onto our charts. So I'm pretty bullish right now. But however, having said the fact that there are 1 2 3 4 5 green candles back to back over here, so even if we want this breakout to be sustainable and to reflect into our markets as being really bullish in nature, in that case I would rather allow the markets to consolidate a bit here between 34,000 to 33,700, anywhere between these 300 points ka range. If we start consolidating a bit, right, if we spend 2-3 days more, then definitely we are seeing a strong bullish breakout which gives us almost 500-600 points from this zone. And if that happens in Dow futures, then definitely we are breaking all-time highs and we are setting a new all-time high in a very short span of time, probably a week from now. So allow the markets to consolidate here a bit, because in any case, if this is also going to be a breakout, so from this zone it will not directly go like this. In any case, that also has to happen. How it would roughly look like is it would probably come here, retest the zone, consolidate a bit, and then eventually break out. So this could be one entry point, but in any case this consolidates here, right, and then slowly eventually breaks out. That's going to be a very good entry. That will be a sustainable breakout which will also sustain over longer periods of time. So having said that about Dow, let's look at another detrimental factor, which is the dollar index. And as we had discussed on a daily time frame, this trend line that you see, this downtrending trend line, which has always pushed the market down, including by catching a lot of people in this strong bullish breakout with such a strong bullish candle. The whole breakout was fake and market plummeted all the way from 106 to almost 101. That's a massive fall. That's more than 5%. So this trend line is pretty strong, and again we seem to have faced rejection from here. We are not able to sustain above the 200 DMA, which is good for our markets because dollar being bearish in nature roughly translates into our markets being bullish. So that's incredibly nice for us. In any case, today's low is taken out, right, 103.240. Then we are slowly eventually coming around to retest around 102.7 levels, and even if those are not held, then we have a long bearish journey from there, which could show really strong bullish momentum in our markets. Now again, we don't do S&P 500 a lot, but a close buddy of mine, he trades in the US markets, so he just told me like if I could add this. And also I felt like even if you don't trade the chart reading is a skill, and any chart you practice on, it only adds to honing of your skill. So this is for educational purposes. If you look at a weekly in S&P, right, we are at a very strong resistance zone right now, right? But what's interesting right now, what's bullish in nature, is every time this 4,300 levels were tested, the markets didn't even consolidate for a single week over there. We saw a direct fall of 4,300 to 3,600. That's a massive fall, right? And the next time we came, we again fell all the way, even breaking the previous swing low. So we are spending some time here. So I'm expecting, if this breakout has to be sustainable, maybe this week spend a weekly doji here, spend some time, and whenever the weekly doji or weekly candles high is taken out, then we have a strong positional long trade in this, where you could be long holding it overnight for probably a week, and from 4,300 we could see around 45-50 levels with probably just 2-3 big candles, right? It could happen really soon. So if you translate it to a daily chart now, on a daily, the only problem that I see for the bulls right now is, again, the red resistance you see is the same resistance we saw on weekly, right? It's a very strong resistance zone. Also, it's the price is traveling in this narrow channel on a daily time frame. If I had to represent this, it looks something like this, right? We are in this channel and now we are finally at the upper end of the channel. So, and even at the upper end, what's healthy in nature for the bulls is the market is consolidating, right? It's not directly just tumbling down, it's not falling down. So on a daily, as far as we stay above, say 4260 levels, we are bullish in nature. We are just looking for some time-wise correction, some consolidation, accumulation before the markets finally break out. And any daily closing, then we eventually see above 4330. We are going to be strongly bullish in nature for targets that are far away. We can be positionally long and make really good money at that moment. However, if we slide down and see a daily closing below 42.60, then the price is definitely going to come all the way firstly to retest the gap, which is pending at 42.20, and below which we could again come down to retest this zone, which was a strong resistance earlier and will eventually become a support now around the 41.69 levels. So in any case, you are planning to trade intraday on an hourly, it's a pretty simple setup. Until markets are trading between 42.60 to 43.20, it's a 60-point range. As far as markets are here, it's a non-trading zone for option buyers. You could probably sell out of the money, or you could sell far away calls and far away puts. But if you're an option buyer, as far as we are between 42.60 and 43.25, we have a no trading zone as an option buyer. And hourly closing above 43.20 is our long position, but we enter slightly with probably 20-25% of the position sizing. Wait for the markets to go up a bit, and then once stop loss hunting move all the way down. Here we pyramid again, we increase the positions, and this breakout will give us the confirmation that yes, this is a strong bullish breakout, and now we have a long positional trade that we are gonna ride and try to make as much money out of it as possible. For those who are interested in shorting the markets, wait for an hourly closing below 42.62, which gives you the first target of 42.11, which also aligns with the 200 EMA on a 15-minute time frame. And if 4200 levels are broken, then yes, we could slide all the way back to 4100. So it's at a very crucial make or break level, so keep an eye on that if you're trading it. Now moving to our markets, let's begin with Banknifty. Banknifty on a daily yeah, Banknifty on a daily is at a very strong support. On a daily, we see this, the angle of this is slightly too vertical for it to sustainably manage, but if it is as far as it is, it's fine. So in Banknifty on a daily, until you don't see a closing below 43,800, right? A daily closing below 43,800, there's no overnight short trades. Even then, it will not be very overnight in nature, but then it gives you a space of around say 200-250 points. But in any case, we retort all the way back down to say 43, we close below 43,500, then you are going to be positionally short in the markets for big targets, right? By big targets, the first target would be around 500-600 points away, and the next one another 400-500 points away. So we have big targets in that way, because then this will be a pattern breakout, right? What kind of pattern? It would look something like this, a double top, right? This is the double top, and this would be the M pattern breakout. This would be the neckline. So any closing below 43,500 on a daily is a strong short positional entry, which can give us really big rewards. But until you see a closing below that, don't be bearish in nature. This is probably just sideways time-wise consolidation. If we now move down to an hourly time frame, I have a convictive feeling about this being a healthy pullback, because we have just come to the lower end, right? We have come to a very strong support zone, the zone that the markets have been respecting since almost the 24th of April. That's more than a month apart, and we are at that strong zone right now. So what could be surprising tomorrow is, for anyone who's short in the market, how they will be stopped out is, if at all, any hourly candle opens and sustains above 44,160 to 200, right? Above this, if we open or sustain, in that case, everyone who's short right now will have to run for cover, and the markets then will not stop at these 44,450 levels. We will definitely make an all-time high. So that's on an hourly. But however, since I myself don't trade hourly, let's just break it down to a 15-minute time frame for better understanding, right? On a 15-minute time frame, again, the trend line support you see is translated from the hourly. It resembles on the 15-minute time frame also. So our trade plan for tomorrow is pretty simple for anyone who's trading intraday. As far as the markets are, one second guys. As far as the markets are trading between this 43,800 to 44,200 zones, it's a clear non-option buying zone for anyone who's an option buyer, whether intraday or positional. It's a non-option buying zone. We do not purchase any calls or puts over here. We wait for a 15-minute candle closing on either side. So the three scenarios being, we either open flat anywhere between 43,800 to 44,200. No one's trading this. If we open gap down directly below 43,800, that's going to be a shock, and yes, that will lead to a strong downfall. But that downfall also, if at all we open say somewhere here 43,770, we probably could come all the way up as a stop loss and to retest the trend line and then come back below. So this zone will be a short entry. Don't directly jump into a massive gap down. Wait for the markets to settle and give you a good entry. or in any case we open directly around 44, 130, 150 or 200 and we sustain the first 5 minutes also, right? Or we retrace a bit to retest the 200 EMA on 50, which is 44,100 levels, and then we go back up, then that's a clear long entry, and this time we're going to sit it out, right? We're going to sit this trade out. If we happen to even close once above 44, 450, 500, then we are going to hold the position overnight until expiry, because then the markets will be extremely bullish in nature. So keep an eye out on Bank Nifty. And in any case, we go below 43,800, then we are going all the way down to 43,500, below which if we have to fall more, then we have to go all the way until 42,850, 900 level. So either side we have long targets, we have big targets, and hopefully we get to play it out. But be patient with this, be diligent with this, allow the market to give you a setup before you enter. And now moving to finally Nifty. I'm way more, slightly more bullish in Nifty than Bank Nifty right now. I'll discuss why. On a daily, if you notice, this looks clearly like a strong bullish flag and pole breakout, right? This is the pole, this is the flag we broke out, and now this is either a down move or it's a retest of the flag and pole breakout, right? Now, how will that be decided is tomorrow, for in any way, right? In any which way, if we close, say below, let's be more conservative with this, below 18,530 or above 18,680, this is going to be detrimental for the markets to decide direction, okay? Either side we close. If we close above 18,680, then we are strongly bullish. We are making a very strong all-time high in Nifty. And if we close below 18,533, we still have a little more retracement left until 18,430 levels. However, my bias stays bullish because, I don't know, it's biased. But also the charts and my gut instinctive feeling tells me that. But in any way, we even slide down all the way to 18,430 to 400 levels, right? It's probably a retest because after this breakout, we have not really seen a retest. So that's pending. That could be what is the time-wise or price-wise consolidation right now before a strong, massive bullish breakout. So now translating it to a 15-minute time frame. Actually, before that, let's just do hourly. On hourly in Nifty, just like Bank Nifty, we are at a very strong support, a dynamic support, right? The markets have taken support here multiple times and we are right there. So in any case, on an hourly time frame, if we open or have an hourly closing above 18,650, it's strongly bullish in nature, then we are definitely going to 18,760, 18,800. And then the sky is the limit. Then we are making newer limits and newer all-time highs. So we just need a hourly closing or an opening above 18,650, and then it's going to be incredible in nature for the bulls, right? We are going to build fresh longs. However, if you're trading hourly and you're interested in shorting the markets, you have no trade until the markets give an hourly closing below 18,555. Then your first target is your 18,470 levels, below which it could be the 18,370, which roughly aligns with 400, around the 215 EMA, right? We could say possibly this zone, somewhere around there. So for any opening between 18,550 to 650, this 100-point range is non-tradable for an option buyer. We sit it out, we don't trade. But however, on a 15-minute time frame, yeah, what's happening here is, again, the yellow dotted trend line that you see, that translates from the hourly time frame. So however, if at all you're planning to be long in the markets, we've got to wait until the price gives a 15-minute candle closing or opening. I mean a closing or a breakout or a breakdown above 666 or 555. Well, that's the number to remember, right? That has got a ring to it. So anyway, if at all we open flat between 555 and 666, we don't trade. We sit it out, wait for the markets to decide a direction. Above 666, whether we open or have a 15-minute candle closing above it, our first target is 719 followed by 771 and then 812, which is the all-time high. And below 555, then we have a quick scalp. Could be a little bit of caution, but I don't think that should be respected so much. But if at all we don't consider this, then below 555, we go all the way down to 18,480 followed by 18,440. So that's the trade plan in Nifty and Bank Nifty. I wish you guys all the best, and hopefully I recover and I get back into the markets tomorrow, and I shall be sharing my daily PNL as usual on Instagram. So I wish you guys all the best, do well, and yeah, let's make some money, folks.